Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market Cipher. So we have seen a decent drop in both the stock market and Bitcoin over the last several days, breaking down from around that 30K area down to currently around 21.5K. And we have seen this drop in the stock market and Bitcoin after the inflation numbers came out, showing that inflation was still going up. And there is that Fed meeting on Wednesday where they do announce the new interest rates. And I think the stock market has been pricing in that interest rate rise after those inflation numbers were released. And so we have seen a correction in the stock market and also Bitcoin. But we're going to start by looking at the stock market. This is the S&P 500 futures chart. Just got it pulled up on the monthly time frame. And what we can see is we do have this order block, this blue box here from this red candle in an uptrend. We're pretty much at that level at the moment. And we do also have some important fib levels here. Just looking at it from the bottom of the stock market crash in 2020 to the all-time high. This level is the 382 fib. And if we take a fib level from this low, this was the first correction here, and then we did pretty much go straight up. So this is a valid low to look at fib levels. But taking the fib from this low to the all-time high, we also see that golden pocket area in line with that 382 fib. So there is some confluence with these levels and also that monthly order block. But when looking at the monthly time frame with order blocks, we do have to wait till the end of the month to see if this order block acts as support. We do have a small spike on the VPVR here, the amount of volume traded at certain price levels, but we are below these larger spikes. We do see the possible VPVR support comes in further down here, and the overall golden pocket is down at these levels, looking at it from this low. If we do come down to this golden pocket, this would be around the area we were before we had that stock market crash in 2020. So just some key levels when looking at technical analysis, but we'll have to wait for that interest rate number to come out and see how the market reacts. But onto Bitcoin now. This is the 2-week time frame. This candle does close at the end of the week. The main thing I want to look at here on the 2-week time frame is looking at the RSI. We have been watching this key level at around a 46 reading on the RSI and just comparing it to previous bear markets. But if we just go back to the two previous bear markets here, you can see in 2018 here, once we broke this 46 level on the RSI, we did capitulate another 52%. When taking that measured move from the top of the candle that closed below this level on the RSI. And that did actually happen within 6 weeks. And again, reclaiming that level initiates the next bull run. Looking back further at the 2014 bear market here, once we broke that level on the RSI and closed below it, it was on this candle. Taking the measured move from the top of that candle to the bear market low was a 65% correction. So 65% correction, 52% correction. When looking at our current situation, once we broke below that level on the RSI, it was on this candle, and taking it from the top of that candle, currently we have had a 49% correction. So we are getting to similar numbers here. Can we go a bit lower? I think that we can, especially given the current economic conditions. And going down to the weekly time frame now, we can see we have been watching the 200-week moving average in red here. And in previous bear markets, this has been a good indication of an approximate low on the bear market. This is the 2018 low, and then also the 2014-15 low, where we did go slightly below it, but it was a decent indication of an approximate bottom on the bottom of the bear market. And just looking at our current price, we can see that 200-week moving average was at around 22.4K, and we have gone below that area at the moment. We do have to wait for this weekly candle to close to see if we do close above this moving average. But based on the past 2 bear markets, it did indicate we were close to a bottom in the bear market. Now the macroeconomics is in a bit of a different situation to those previous 2 bear markets, but I do think this is quite a good place to start buying Bitcoin for the long term. For me personally, I have been dollar cost averaging every day Bitcoin's under 30,000, and I did just do a couple of bulk buys. I did one at around 25k, which was approximately 10% of my capital, and also did another 15% of my capital at around that 200-week moving average at around 22, 23k. So far I have put in around 25 to 30% of my capital, and it's important to keep some of that to buy lower down given the current state of the economy. I will also add another 10 to 15% at around 19k, and the rest I'll wait till there's clear signs we have bottomed out and possibly gone sideways near that bottom for several months like we did in 2018, 2019. But just looking at some order blocks here on the weekly time frame, we do see we have these two red candles here in an uptrend. These were pretty much the only weekly candles after we did rise from 10k to 40k. And I think these could become some key levels where we might look for a bottom. And just zooming in on those levels, we can see the first order block here is between 19.2 and 19.4k. And the second order block is between 18.2 and 18.4k. And there is also a CME Bitcoin futures gap down here at around 19k. So I do think there's some confluence down here, and this could possibly be where we bottom out. But I do think we could spend several months here going sideways, going into July, August, and September. And the bottom would be confirmed on breaking this falling wedge pattern. Just pulling up the weekly RSI, we'll see how low we are. We're sitting at a 26 reading. And just looking at the previous two bear market lows, we can see in 2014-15, we got down to around a 28 reading. And in the 2018 bear market, we got down to also around a 28 reading. So we are lower on the RSI than the previous two bear markets. Again, we don't have to do the same thing, but I do think we are getting closer to that bottom of the bear market. Pulling up the VPVR now, we can see that we do have this big spike further down here, which is exactly between both of these weekly order blocks, also where the CME Bitcoin futures gap is. So there is a lot of confluence with this level, and I think this could possibly be the area that we do bottom out. We can also take a look at the total crypto market cap. This is the amount of money in all of crypto. We did peak out at 3 trillion. We were watching this $1 trillion level with this yellow dotted line, as it is that psychological $1 trillion level. And we also had this price action previously in that range, but we have gone below that. We're currently sitting at a $900 billion market cap, and this is the 200-week moving average on the market cap. We can see we're pretty close to that also. Looking back at 2018, we can see this was also a good indication that we were near the bottom on the crypto total market cap. And onto the Bitcoin futures chart now on CME. Just looking at some of those gaps, we can see with this recent drop down, we'd create this gap higher up between 27.3k and 28.7k. And we did also have this gap here from way back when in 2020. This gap was between 23.5k and 26k. We can see with this recent drop that we did close this gap, and there is one more gap further down here, just going back also to 2020, and this gap here is between 18.5k and 19.1k, and that would be another 10% drop from our low here at 20,800. So we are also quite close to filling this gap, and I do think we will fill this gap. And this is in that area of where those two weekly order blocks were, either side of this gap. And just looking at this initial drop here after breaking this falling wedge pattern, in the last video we said this is a bearish pattern and it's more likely to break to the downside. We were also watching this trend line, just connecting these highs, and we see it did act as resistance pretty much exactly here on the futures chart. We also saw that daily EMA ribbon did also act as resistance on these attempts higher. And if we pull up the VPVR on the futures chart here, we see a similar thing. We see that spike further down here around 19k, in line with this futures gap, and also where those 2 weekly order blocks were. And back to the spot price chart now. This is on the daily time frame. We do just have some daily order blocks drawn in here. We did have an order block here at 26.4k. We did initially get a small bounce off that order block, then we did shoot straight through it. We do have another order block further down here between 18.5k and 18.3k. And that's also in a similar area to those weekly order blocks and that futures gap. This daily order block comes from all the way back in 2020. We can see from this green candle in a downtrend. So now I want to look at Bitcoin on the 3-week time frame, and I'm looking at the Ichimoku cloud here in green and red. And this cloud can act as support or resistance, and the thicker the cloud, the stronger the support. But the main thing I want to do is just compare the bear markets on the 3-week time frame with this cloud. We can see we have come down here and finally touched this cloud on the 3-week time frame. And if we go back and look at 2018, we see a similar thing. We did come down in the bear market. We did touch this 3-week cloud, and it did sort of indicate that the bottom was in. Once we touched this cloud, we did come back up to it. We can see how it acted as resistance here. But looking back further at 2014 bear market, we also see a similar thing. We came down and finally touched this cloud on the 3-week time frame. And when we did that, it did indicate the bottom was pretty much in. So I'm not basing everything on this cloud, but it is just interesting to compare those 3 bear markets. And we can see, looking at all 3 now, that in each bear market we did come and touch this cloud, and it did indicate that the bottom was in. And again, these don't have to be the same, but it is interesting looking back at history. And here's another similar comparison. This time we're looking at the 2-week time frame, and we do have the Bollinger Bands pulled up here, these white lines and blue line. This is basically a volatility indicator. When these lines squeeze together, it can indicate that a volatile move is coming. We can see that they're starting to expand here as we move towards the bottom of this Bollinger Band. But the thing I want to look at here is looking at the bottom Bollinger Band here and the 200-week moving average in red. But what I'm looking at here is when this bottom Bollinger Band in white crosses the 200-week moving average in red. And we can see it is pretty much touching at the moment. But looking back in history, going back to the 2018 bear market, we can see we came down in the bear market. This is the 200-week moving average coming up in red. And once the bottom of the Bollinger Band here crossed the 200-week moving average, it did pretty much indicate the bottom, and also indicated pretty much the bottom price. Looking back at 2014 bear market, you can see we were coming down here. This is the 200-week moving average. The bottom of the Bollinger Band started coming down. It crossed the 200-week moving average right on this candle, and this candle was actually the bottom of the bear market, and it did also pretty much get the price off the bottom of the bear market. We can look at it on the log chart here just so we can see all of it at once. The log chart does skew these Bollinger Bands with these big dips, so ignore that. But just looking at these 3 circles, we can see the bottom Bollinger Band crossing that 200-week moving average on all 3 occasions. Did pretty much indicate the bottom of the bear market. And again, I'm not solely relying on this, but it is interesting to look at history and see that we could possibly do a similar thing. Now, the next thing I want to look at, and people have started talking about this again, is the hash ribbon indicator. This shows when there is a capitulation by the miners, and we can see we are starting to get this green dot here, this capitulation from the miners, and we are starting to turn red here. And in the past, this has been a very good indicator to tell us when the bottom is in, and we eventually get this buy signal in blue. We can see we had a miners capitulation here when China shut off the mining. We had that big drop and we had this sideways action for several months. But once we did get this buy signal, even though it didn't get the bottom, it was a good buy and we did go a lot higher. Just looking back at the 2018 bear market now, we did get a similar signal. It didn't come until near the end of the bear market. We started getting that crossover into the red here around this level. We had that one more big 50% drop, and that's why we wait for the buy signal. We can see the buy signal did come in here around this level, didn't get the exact bottom, but did tell us that it's highly likely the bottom is pretty much in. Looking back even further at 2014 bear market, we can see we did come down here. We got that capitulation signal by the miners. There was only a slight turning red here, and it did eventually give us this buy signal. The bottom was in over here, so again, didn't get the exact bottom, but did confirm a bottom. And then we did also get several buy signals here with these mini capitulations. But all of these buy signals were around the bottom of the bear market here, and they were all good buys to indicate that the bottom was in. So this is definitely another signal to keep an eye on. It has been very accurate, and we have only just started this capitulation. We can see it's crossing into the red, and eventually we will get that buy signal on the other end, and this will be a great confirmation that the bottom is in. And again, this is called the hash ribbons indicator. It's easy to find on TradingView. And over to Market Cipher now. This is on the 12-hour time frame. After this big drop here, we can see we are printing a major green dot on the 12-hour time frame. So we could be getting close to a dead cat bounce at least here, or some sideways action. We see the previous major green dot here. We did have one more drop down, quite a big drop. The second green dot here did indicate we were going at least sideways and a little bit up, but the higher term time frames are going to be more accurate. Looking at the daily time frame, we see the last major green dot was around here, and that did indicate some consolidation and a little bit of a bounce. And we can see this blue wave starting to close off a little bit here, but it might still be a few days away before we do see that green dot. But the main time frames we're looking at to try to find a bear market bottom is the weekly and the 2-week time frame. This is on the weekly time frame now. We did actually have a green dot around this area, but then we did have a drop back down, and that's why we need to wait for those green dots to get confirmed first, as it did disappear before the week closed. So we are still waiting for a weekly green dot. We did get them all the way up to the 6-day time frame. Looking back in the past, the weekly green dot here got the bottom of the 2018 bear market. But looking at 2014-15 bear market, we see this major green dot on the weekly time frame didn't get the exact bottom. We had one more drop back down. The second weekly green dot did get the bottom, and that's why we're also watching that 2-week time frame. We can see this blue wave still coming down here on the 2-week, and does have a bit more to go before we can possibly see that major green dot on the 2-week. Looking back in the past, in the 2018 bear market, the major 2-week green dot did get the bottom here. Also in 2014, the major green dot did get the bottom of the 2014-15 bear market. So this is the main green dot we're waiting for to indicate that the bottom is in. And again, we can see that on this chart we've been watching, which just shows the major green dots going from the 1-day, 2-day, 3-day, 4-day, 5-day, 6-day, weekly, and 2-week time frame, and just comparing the bear markets. We can see we got that major green dot on this 6-day time frame, waiting for the weekly one. And I think we are doing a similar thing to the 2014-15 bear market here, where we did end up having to wait for that 2-week major green dot to indicate the bottom was in. So I think that's all. Hope you enjoyed that analysis. We'll have to wait for the announcement on Wednesday with the interest rates and see how the stock market reacts, as that will affect Bitcoin also. But we are pretty much on a bear market low watch now, looking at all these key levels. And again, we have these weekly order blocks here between 18 and 19K. We have the spike on the VPVR in that area. We have the futures gap on CME. We also have a daily order block in this area. And we are also around that 200-week moving average, which has been a pretty good guide that we are close to the bottom on previous bear markets. So I do think it could take several months to play out here, and we could go sideways for a while like we did in 2018 at the bottom of the bear market, spending 3 months around that 200-week moving average. But we'll keep an eye on it, and we'll keep watching the macroeconomic situation, as everything is going to have an effect on Bitcoin. So thanks for watching. I'm Bitcoin Mamo. See you next time. Bye.